Hi, this is Ken from Tortoise Capital Trading, and I want to describe my current application of the autoframer. This is a prototype spreadsheet that's helping me calibrate my intraday trading that incorporates reward to risk calculations from the swing trading patterns using the standard mechanical framing, and then using various risk levels intraday and the range stat to help me with day one trading or yellow zone trading. All right. So, to explain the spreadsheet, okay, I have a list of about 400 or so symbols that are organized: the Dow 30, the ETF 30, S&P 100, NAS 100, ETF 200, some favorites, and then I've just dumped in some things from tonight's report, zeros, things that I was just interested in, maybe not favorites, but just interested in. Things like Devon Energy and Chevron, the energy sector, VIX, oil, Hewlett-Packard, Gold, Silver, Walmart, Home Depot, Cisco, Intel, Microsoft, and Pfizer. So I'm interested in those as a result of the weekend and daily reports, and so I'm going to study those later for my own purposes. Now, in order to do mechanical trading for tomorrow, what I need are these data points here under reference data that you can see. I need yesterday's high and low, and from that I can compute the range. Then I want to compare it to an average range. Now the average range is going to come from this reference data over to the right on the spreadsheet that I normally don't just print, but you can see it here. So I get 30 days of range data that I use to compute the range stat and some other statistics. For example, I want to compute the average range of the last 30 days. In Devon Energy, that's $1.95. The standard deviation of the last 30 days for Devon is 0.67. Now, the range stat consists of the average range plus the standard deviation. So for Devon, a range stat is $2.62. Now, what does that mean? That means that if I can hypothetically see a low of the day in Devon, like on a morning hook, I can then use $2.62 as a reasonable upper bound for the maximum average intraday move, or the boundary of rational exuberance. Anything beyond that would be into the area of irrational exuberance. Now, how far has it gone in the last 30 days? Well, the maximum move in Devon Energy was $3.87, or a full $1.20 past that boundary of rational exuberance. Now, when I take the range stat, which is average plus a standard deviation, and divide it by average true range, it comes out, in this case, to 1.38. Now, that is how far I think it could move off a tentative bottom in terms of ATR. Sometimes I might want to know that. So it can move almost 1.4 ATR intraday and still be normal. Now, if I take yesterday's low in Devon and then add a range stat to it, I come up with 91.29. So the low of the day in Devon was 88.67, and I add the range stat to it. It could have moved up to 91.29 and still been a normal move. And then I can look at yesterday's chart to help me appreciate what kind of moves Devon is capable of doing intraday. Now, the range in Devon was from, let's see here, let me come back just a little bit, was from 90.47 to 88.67, or $1.80. The average range in Devon is 1.97. That works out to a range divided by average of a 0.9 of an average range intraday on Friday. So Devon was relatively quiet, almost normal quiet, slightly less than average. All right, so now let's go back to framing Devon. Now that we have all this reference data, we have a high, we have a low, we have the range. Now what I'm using as an entry buffer is 5 cents and a stop buffer of 5 cents below yesterday's low. So when I total that up, the actual size of the buffer up and down is 10 cents, a nickel plus a nickel. So the high in Devon was 90.47. Add a nickel, you get a mechanical entry of 90.52. The low in Devon was 88.67. You subtract a nickel and you get 88.62. So that represents, oh Jesus, what a horrible example I just picked. It gives you an actual a risk of $1.90, right? The entry minus the initial stop is $1.90. Now it turns out that, not counting yet Friday, the previous 10-day high in Devon was 90.47. So there's actually its high was above the previous 10-day high. So that's not a good one to use for a test of the previous 10-day high. Let me find one that actually has a better one. Let's take a look at Chevron. Same thing now. The mechanical entry is 102.68. The initial risk is 101.30. That gives us a reward of $1.26. Now, and that's on a retest of the previous swing high at 103.94, the 10-day high. Now, with a reward of $1.26 and a risk of $1.38, you can see that my reward to risk is only 0.91, so that's not good enough for a swing trade. So if Chevron fired on any of the patterns and then I ran 2-to-1 reward to risk, it would fail on that criteria. So now what I want to do is I'm going to compute that reward to risk using a mechanical frame for all of the items on my watch list. Now what I'm going to restrict that to is just the members of the Dow and the ETF 30, just for ease of calculation and display. So I've selected just the Dow and the ETF 30. I want to now come to reward to risk. I'm going to use a number filter, greater than or equal to 2. So when I run that, there's now about a dozen symbols that meet on a mechanical basis a reward to risk of 2-to-1. If I sort that from highest to lowest, it turns out that Hewlett-Packard has the best reward to risk in the market, based on a test of the 10-day high and the mechanical frame, followed by Walmart. Let's go take a look at those charts, shall we? So let's see, Hewlett-Packard, HPQ. Let's see what we get. This isn't surprising because of that big gap down. A retest of the 10-day high is way up there. So that could be problematic. Let's take a look at Walmart. Ten-day high is probably right about here, and now a retest of the 10-day high is going to give us a nice little trade in there. So on a swing trade basis, what we have are a bunch of candidates that meet the 2-to-1 swing trade reward to risk criteria. But you've seen just on the last two charts that I may not believe that it can make that all back in one day. Probably won't. I would bet against it. So what I'm really interested for intraday trading in the yellow zone are those symbols that give me a very favorable reward to risk ratio on a one-day basis. But I would like to have things that have high potential on a swing basis so that if it starts working, there's some reason to believe that longer-term traders might actually be interested in that target. So let's go back and see how the autoframer helps us here. So now I've selected all the ones that have a 2-to-1 reward to risk on the basis of a swing trade. And now what I'm going to do is I'm going to take I'm going to calculate an intraday risk level. Now we know what the range risk is. That was simply buy the mechanical high and use an initial risk of the mechanical swing, the mechanical low. Well, what if I'm going to add two other risk levels to consider? The minimum ATR risk I'm going to say is 0.25, or a quarter of an ATR. And if I used one ATR, I can come up with three different risk levels to begin framing my intraday trade. Now, in Hewlett-Packard, a quarter of an ATR is 31 cents. A full ATR is $1.22, and then the range risk, which was the mechanical framing, turns out to be 60 cents. Now I have these three columns color-coded so that it highlights the range, or it highlights the risk level that's in the middle of those three. In every case but one, the range risk is between a quarter of an ATR and a full ATR, and so I don't mind taking that as my swing trade risk size. But it turns out in one of these, in Home Depot, for example, that a quarter of an ATR risk is 17 cents, a full ATR is 69 cents, but the range risk plus that buffer is 80 cents. So in that case, I'd be willing to use one ATR because it's the range in the middle. Now, in my own personal discretionary trading, I'm willing to take, generally speaking, 10 cents or 25 cents as my initial stop. And so I like to compare that level to this minimum ATR risk. And you can see in many cases that even a quarter of an ATR is larger than 25 cents. In the case of XLI, it's 12 cents. Let me find one that I might like to trade. Let's go AXP, American Express. A quarter of an ATR turns out to be 25 cents. A full ATR is $1. And then the range risk is 0.79. It has a reward to risk of almost 4 to 1. And then if I sort the mechanical risk that I've selected here, which is 80 cents, and divide that by my risk, it turns out that it has an intraday reward to risk of 1.5 to 1. So that sounds pretty attractive. Let's take a look at AXP and see what we can come up with. I love that pattern. Look at that. Let's say it's going to hold now at 43, and starts moving up with power, and it looks like it's going to take out the mechanical entry of 43. It looks like about 75. What if it opened up down here where my cursor is and then starts moving up with power while the market is moving and XLF, the financials, are moving, and maybe the financials are the strongest sector? That could tempt me to try to front run a mechanical trade, and now I know that with 25 cents initial risk, I can trade that thing with tactical momentum, and then with 25 cents, my actual reward to risk is 4.5. Well, why is it that large? Well, because I know that my in AXP, if I use 79 cents or 80 cents, and then I take the range stat divided by my risk, it comes in at 1.5. That's if I'm using 80 cents. But if I divide that by 0.25, I come up with something like 4 to 1 intraday, which is very, very comfortable, and I'm using a 25 cent initial stop. That means AXP is very tradable intraday. If I can spot a low of the day, hypothetically, and the market and the financials and AXP are all moving up with power, then I can trade that intraday on a one-day basis by virtue of this. This autoframer tells me that that's what that I'm in favorable territory. Now, if I sort this group by the range stat divided by my risk, what I essentially have done is use the swing trade reward to risk calculation using mechanical frame to find things that have a swing trade advantage, and now looked at it on the basis of a one-day intraday average normal move divided by a mechanically calculated risk. And now I should be looking at things like Merck and Home Depot and Procter & Gamble. So let's take a look at those charts and see what they show us. So MRK for Merck, that is absolutely tradable on an intraday basis. I guarantee it. You have a swing low somewhere around 32 in a doji. You have another little doji that was a white candle, and what used to be channeling and just crossed up, as you can see on Williams percent R10. And so buying this one with momentum, I would want to buy this at 32.30 anyway. But if it opens up inside yesterday's candle and starts moving up, and I can manage 25 cents in it, man, I'm going to be on that in a hurry, knowing that I have a retest of 33 or 33.5 for swing traders. A very tradable intraday technique. So that's basically how I'm using the range stat in this auto framer to help me find targets. Now let me take a look at the ones that I was interested in anyway, and I'm just going to select. I'm going to select the things that were 0. And then these are the ones that, off of that list, Hewlett Packard, Walmart, and Home Depot, were all 2-to-1 reward to risk, and they have a range stat divided by my risk. All looks very favorable. So let me look at Walmart and Home Depot in addition and see what else we have. So Home Depot. I love that trade too. 4 days down in a row, and the last two are in dojis. It's finding support above the 50 and above the 200. It's a channeling, essentially a channeling kind of a trade. And if it takes out 37.5, I have a reason to believe it could get to 38.5 or $1 very easily. A move of $1 looks like it's reasonable. But how can I check that? Well, I know that the range stat for Home Depot, and we're looking at this column here, the range stat plus one standard deviation. Look at that, $1.01. If I can find a tentative low of the day in Home Depot, I know that it can move $1 with no trouble. Intraday, that would be a normal intraday move for it. If I use just the minimum ATR risk of a quarter of an ATR, that gives me 17 cents. So let's call that 25, round that up to 25 cents. If I use something like a 25-cent initial stop, I have a reason to believe that there's a 4-to-1 trade waiting for me in Home Depot if it just moves $1 off its intraday low. So I'll be watching SPY and the basic materials and Home Depot, and if all of those things look favorable, Home Depot is definitely something that's on my list. So that's how I use the autoframer to help me calibrate my targets for intraday yellow zone discretionary trading. Somewhere in there's a mechanical system just waiting to be developed, and I can see myself going in that direction. But that's how I'm using the autoframer to help me get information on my swing trades and intraday trading. Now, if you have a bunch of things that fire as swing trades, you can do the same kind of thing. I can just I don't even have to use. Let me clear the criteria here. If I just sort these by reward to risk, those are the ones that I'm interested in. That gives me a quick sort on which ones look promising on a retest of the 10-day high. If I simply look at those on the basis of the range stat divided by my risk, I might be interested in anything there are some in here that are tradable intraday that don't meet the swing trade criteria, but I'll guarantee you that there's some things in here like silver, which if we can trade with a 20-cent initial risk, is going to give us very favorable, because even with an 80-cent initial risk in silver, or an 8.83, which is a full ATR, there's still a 1.5 ATR move intraday available in silver. So if we can trade that with 20 cents, that gives us a 6-to-1 intraday potential in silver if we can spot the low of the day. Now, we know that 9 times out of 10, silver has been making a high of the day or low of the day within the first hour, so I'm going to be paying attention to silver very, very closely. So that's how I use the auto framer, and that we're closing in on 20 minutes, so I'm going to cut it off here. Hopefully that clarifies things a little bit. I'm not so sure I was clear, but you'll be the ones to judge. So this is Ken Long from Tortoise Capital signing off.